Okay, this video, I'm Dave Hines. This video is the first, or will be the first on the playlist of what I will refer to as the Momentum series. And in it, I want to take a few minutes just to fill you in and tell you a little about the tax system, how it works, how complex it is, a few things like that. So, first thing I want to do is explain how the marginal tax rates work, what they are in Alberta, and how they work. So here is some charts with the rates and some explanation.
Here are the personal tax rates for Alberta in 2019. This is the federal and provincial combined. And of course, this assumes no special deductions or anything, just person has a basic exemption. See that the rates go up as the income goes up. The first a little over $12,000, there's no taxes. And then the marginal rates keep going up. And at the top rate, which is in excess of $300,000, the rate is 48%. Now, one of the things I want to point out here is just how the marginal tax rates work. You'll see here we have the first part, no taxes. What I want to explain is if you made $1 more, in other words, $12,070, only $1 would be taxed at the 15%. The first $12,069 would not be taxed. And here you can see the top bracket. Now keep in mind that only the amount over $314,928 is taxed at that rate of 48%, which by the way is a very high rate and not necessarily good for the economy. I also want to point out that up until 2015, Alberta's top rate combined was 39%, which was a very competitive rate, and we like to call it the Alberta advantage. But the big thing I want to point out here is how the marginal rates work. And the big thing to note is when you go into the next bracket, sometimes people think that that means all their money is going to be taxed at that rate. And it's not. It's just the additional dollars. So it is worth it to go into the next bracket. You may pay more tax on that excess money, but it's still beneficial. It is only the last dollars that will go into that bracket. The rest will still be taxed the same way as it would have been had your income not gone up. Final chart just gives you an idea how much a person would pay in taxes at different levels. And I want to note that the high income earner, a person making $1 million a year, would be paying $446,000, slightly over $446,000 taxes. Making $500,000 would be paying $206,101. That's a lot. Earners do pay a lot of taxes. And I'll talk more about that in a couple of minutes.
Okay, so now you've sort of seen how the tax rates work. You've seen what they mean and what they mean to our taxpayers, and how the marginal parts work. There's a few other things I would like to talk about. One is I want to take some time here and explain that taxes in Canada is gray. Not even a little gray, it's very gray. You'd think, accountants for numbers people and that, and taxes, it should be pretty straightforward, black and white. Well, it's not. Not even close. In fairness, the system gets more complex every year. And in fairness, the government, they'll write a tax, and people say it should be simple. So, yeah, fair enough. They'll say, well, okay, we'll tax income. Well, what's income? If I give an employee a car, is that income? or pay for their house, or a cheap mortgage, or a salary. So you can see how it starts to get complicated. And then there are some people out there, well, a lot of people like myself, but there's also a lot of people who I would say are a lot smarter than me, who spend their life trying to figure out the tax code. I can think of one person that I think probably considers it bedtime reading, and they're always looking at how to work it. So government will try to simplify something, and us accountants will look at it and say, well, we think, the way you've written it, this will work better for our client this way. And so then they have to write it to adjust that, and it goes on. And I think it's been going on since early, something like 1971 was the last major tax reform. So it's got exceptionally complicated. Now, some of that probably should be avoided and could be, but then it's also made more complicated by the fact that governments and politicians tend to have pet projects that they want to encourage. I would say they shouldn't. They should just stay out of it and just have, equal taxes and fair taxes and let the markets decide. But that has not happened in the past, and I don't suppose it's going to happen in the future. So things get complicated. So you'll hear a lot of things that aren't true. And some of them are partially true. But the biggest point is tax is gray, it's complicated. And as one of my lawyer friends has said, when I asked him how you knew something, he said, well, a judge would tell you. Meaning, at the end of the day, you could go to court, federal court, Supreme Court, and the laws don't really get changed, but they get interpreted all the way along. So that's the first thing. The other thing is I want to point out is you'll hear about people who are very wealthy who don't pay tax. Well, in Canada, if you make money and you keep the money, you'll be paying taxes. Now, I always like in my courses to point out there is an exception to that. There are people who make money, don't report that money, don't pay taxes. And if the government catches up to them, I like to say that they have a free room and board package for them. Yes, that means you can go to jail for tax evasion. We do want to distinguish between tax evasion, which is mainly where you misrepresent the facts or don't disclose what you're supposed to, versus tax avoidance or interpreting the rules because they're great. And we do it, and by the way, so does the government. So, but in Canada, if you make money and you make a lot of money, you're going to pay a lot of taxes. It's true. They can hire the best accountants and lawyers, and we can reduce the tax load, but not in the way you think. Let me give you an example. If you were going to pay $1,000 in taxes, and I came to you and said, we could rearrange your affairs and cut your tax bill by 10% per year, how much would you be prepared to pay me to do that? Obviously, no more than $100 a year. And if I said to you and you were paying $10,000 a year, you'd say, well, that's $1,000 a year you'd save. But it's going to cost you a couple of $1,000s a year to do this. You'd say, well, forget it. But if you were going to pay $100,000 taxes, and I said, we can restructure your affairs, it'll save you about 10% a year, and it'll save you about 10% a year, that's $10,000 a year. It'll cost you $5,000 or $6,000 or $7,000 to set it up, and about $2,000 a year to administer it. What would you say? You'd say, well, where do I sign? This is a great deal. Just think if you were the one who was paying, somebody who was paying $1 million. Or even, let's just even like, if we go to the chart from before, the person who was making $1 million a year, paying over $400,000 a year, if I said we can cut your tax bill by 10%, that's over $40,000 a year. And if I said it costs ten or $20,000 to set it up, and $2 or $3 or $4 or even $5 or $6,000 a year to administer it, you'd say, let's go for it. And you would still be paying a lot of taxes. Remember, we said 10%. So instead of paying $446,000, you're paying just shy of $400,000. And that's the thing. Now, you will hear people say stuff. And I always say, when they say, well, you don't have to pay tax if you make, whatever, my comment is, I guess they know more than I do, and frankly, more than most of my friends. And I'm talking about the ones who are specialists and some of the best people in the business. There's a lot of misleading things. Sometimes it's because and probably a lot of the time, you're getting part of the story. Someone may even think or believe they're not paying taxes. And maybe they're not paying taxes personally, but they're paying taxes in their corporation. In other words, their corporation made money and paid taxes, but they didn't take the money out, or they took it out in dividends and they paid a smaller amount. So you have to be careful. You need to know the whole story and the whole situation. And there have been some questionable schemes come up from time to time, and they usually get kiboshed somewhere along the line. And sometimes those people who get suckered into those schemes, because it's a racket, in my opinion, get burnt. So I want to point out that yes, we can save taxes, we can make your life better, we can make it more efficient, and the rest. But if you're making money, and I'd say another example, say if you make a bunch of money and you were to give it all to charity, yeah, you wouldn't pay any taxes. You also wouldn't have the money. So there are a lot of cases where it seems that way. And I would say you got to be very careful and skeptical of what people tell you, because first of all, people like to brag, but also people often are only looking at part of the story. So those are some basic things about how our tax system works. This is really the first video of the Momentum series in the playlist. I hope you'll find this helpful, and I hope you will watch the other videos and find them helpful. If you find a video helpful and interesting, please like it, share it, and don't forget to subscribe to this channel. And thanks for watching this episode of Dave's Business Insights.